One of the biggest lies that banks tell us is that the money in our bank accounts increases in value. But in reality, rising inflation and falling bank rates cause us to lose money without even realizing it. You see, day by day, things get a bit more expensive, like your morning coffee or your yearly rent. But the money in your bank doesn't grow much, and when it does, it grows very slowly, not being able to keep up with the rising cost of living. But you don't have to worry. There's a better way to keep your money safe and even make it grow. So guys, stick around as we show you 7 assets that are more reliable and secure than just keeping cash. With that said, let's get started. The first asset on our list is precious metals. You see, one big reason why money is important is because we use it to save for the future. But these days, governments are printing a lot of money to pay for their expenses. This can make the money we have worth less over time. So experts suggest putting your money into things that are special and not easy to make. That's why rich people always set aside some of their money to buy precious metals, like gold, silver, and platinum. These metals tend to become more valuable when prices go up a lot. For example, in the 1950s, you could buy an ounce of gold for $40. Now in 2023, the same ounce is worth over $2,000. According to Prime XBT, they expect gold to be worth $10,000 by 2032. This means that even in about 10 years, your gold investments could be 5 times bigger than they are now. This is even though the value of regular money is still going down. So gold is becoming more valuable, and it's a better choice than keeping your money in a bank. If you're wondering how to invest in gold without buying real gold, you can think about gold ETFs. These are easy-to-use investment options that let you profit when the price of gold goes up. You don't need to have physical gold for this. It's all done electronically. Number 2, industrial commodities. Precious metals like gold and silver are known for being rare, but they also have another special quality. They're really useful for making things we use every day, like electronics, medical tools, and nuclear reactors. Other metals such as cobalt, nickel, and copper are also in high demand by industries. They have qualities that are hard to find in other materials. For example, cobalt has become super popular because it's needed to make batteries for electric cars. So the demand for cobalt has gone way up, and its price doubled in just 10 years. You might not be able to buy these raw materials or store them yourself, but you can still invest in companies that dig them up, like Rio Tinto, or use financial tools like futures and options. Number 3, safe haven currencies. When you put your money in regular currencies like the dollar or the euro, it's important to think about how stable the country is. Some wealthy folks choose to put their money in Swiss banks because Switzerland is known for being a safe place to keep your money. The Swiss franc, which is Switzerland's money, is seen as a safe choice when things get crazy in the world. People notice this during times like the Eurozone debt crisis in 2009 and the big financial crisis in 2008. Lots of money flowed into Swiss banks to keep it safe from losing value. The Swiss franc is also handy for international trade. When the US stopped doing business with Russia, Russia used Swiss francs for their transactions. This made Swiss francs really valuable, and they became worth a lot more compared to other currencies. So currencies like the Swiss franc, British pound, and Chinese yuan are good for keeping your money safe. But not everyone can open a Swiss bank account. Luckily, you can still invest in these currencies using currency ETFs or forex brokers like forex.com, and you don't need a ton of money to get started. Number 4, sovereign guarantee. How safe your money is depends on the government that supports it. This is why investing in something called sovereign guarantees is a good way to keep your money secure. The government of any country is usually the last to fail when it comes to money problems. If the government can't pay its debts, it's a big problem for the whole country, and no one will want to lend them money anymore. But here's the thing, regular money isn't backed by something like gold or any physical thing. It's mostly backed by people trusting the government. So one safe way to invest is by buying government bonds or something called G-Secs. These are like promises from the government that they'll pay you back with some interest. But remember, not all governments are equally strong. In the United States, for example, you can invest in things like treasury bonds, notes, and bills to get these government guarantees. They offer better returns than just keeping cash. But it's essential to choose bonds from strong governments with good credit ratings. Think back to the Greek debt crisis in 2009 when other countries had to help Greece because it couldn't pay its debts. So always consider how strong a government is when you're investing in these kinds of things. Number 5, mutual funds and stocks. When you want to make your money grow, there are different ways to do it. One way is by investing in things like treasury bonds, but they're safe, so you don't make as much money. If you want more profits, you can think about buying stocks in companies. Now, not all stocks are the same when it comes to risk. Some are called growth stocks, like tech companies. They can make a lot of money, but they can also lose a lot because they work on new ideas that might not always succeed. On the other hand, there are value stocks. These are from solid companies with a good track record. They don't jump around as much, and they often pay regular dividends to their investors. If you don't want to pick individual stocks, you can go for something called a mutual fund. These are like baskets of stocks put together for professionals. For instance, Vanguard has mutual funds that focus on dividends, which can be a good choice if you like getting regular payouts from your investments. Number 6, land and real estate. Land is a pretty special thing because it doesn't lose its value easily. That's why accountants call it a non-depreciating asset. It's always been in demand, and as our population grows, we need land for homes, schools, factories, farms, and stores. Real estate, which includes things like houses and commercial buildings, is also a good way to protect your money from losing value when prices go up. Over the years, the cost of houses has gone up a lot, even though it had a big drop during the 2008 housing crisis. So when regular money isn't worth as much, having real estate can be a smart move. You don't need tons of money to get into real estate. You can invest in something called real estate investment trusts, which are like mutual funds for real estate. They focus on different types of properties like healthcare facilities or apartments. Another option is to get a loan to buy rental properties. The rent you get from tenants can cover your loan payments and even make some extra money. Number 7, collectibles. Sometimes people collect things like old cars, unique art, fancy bags, or rare books. These aren't just for fun, they can be worth a lot of money. Think about old cars, for example. Most cars lose value as soon as you drive them off the lot. But with vintage cars, it's the opposite. They become even more valuable over time. Some special cars are so rare that they can sell for millions of euros. Take a 1955 Mercedes-Benz 300 SLR, for instance. Only 2 were ever made, so car enthusiasts go crazy for them. Art is another example. A painting by Leonardo da Vinci called Salvator Mundi sold for a mind-blowing $450 million at an auction. People with lots of money like to buy limited edition things because they don't lose value, and they can sell for incredible prices if they find the right buyer. If you have collectibles to sell, you can use online places like Whatnot. You can even own a part of something valuable if you can't afford the whole thing. Websites like Convey and Masterworks let you do that. But here's the thing, while regular money is essential for everyday stuff, relying only on it for your future might not be safe. It's a good idea to mix in other things like real estate, stocks, bonds, precious metals, cryptocurrency, mutual funds, and real assets to protect your wealth from ups and downs in the market and rising prices. Just remember to talk to money experts and do your homework before you decide. Having a smart plan and a mix of different investments can help you have a more secure and prosperous financial future. Alright guys, that wraps up our video for today. If you found this video useful, please do well to give us a thumbs up and hit the subscribe button for more.